Let's bring in George Tsilis, senior markets correspondent here. George, we're talking Apple. And, I guess I wanted to discuss this stock because of the last earnings report. The stock initially traded down below $170, now up about 7.5% so far this month. It wasn't a great quarter by any stretch of the imagination. Services side was pretty good, but a company that reports 4 quarters in a row of declining revenues, and then you see a pop in the stock, I think it's a head scratcher for a lot of investors.
It is, Tom. I mean, if you look at the composition of their sales, you're right. In the last 4 quarters, we've seen sequential declines in sales. And last quarter, they generated about $89.5 billion. Now, that was down compared to the $90.18 billion for the same quarter last year. But nonetheless, if you look at the earnings composition, they generated about $1.46 per share in adjusted earnings, and compare that to $1.29 previous year. That's about 13% increase in EBITDA, and I think that's one of the reasons why the stock is higher. But also consider the bear trap that was in play just a couple weeks ago, and of course the rally that we've had, and Apple's participating. So I think the stock may have been a little bit overdone from the standpoint of earnings growth for a very profitable company. The total sales of iPhones has been relatively robust. The composition of their sales now, with iPhone being less than 50%, I suggest is actually healthy. And the services, too, have been growing quite handily as well. There's also some news, and this is always going on with companies that are based in Ireland or in the European Union because of tax reasons. But there's a review of a ruling back in 2016 that might come to the foreground in terms of a benefit that Apple got back then for about $14 billion. But a lot of times these rulings get held up in court for quite some time, and there's always some government out there that's looking to, of course, claw back some money from a big multinational corporation like this one, speaking of it being a multi-trillion-dollar corporation as well.
George, the frustration with people that they with the rally in Apple based on its earnings. This company is transforming into a high-margin growth business. It's just doing it very slowly. I'll show you why. Their services, 71% gross profit margins in services. That makes up 39% of their gross profit, and that area is growing at 16% year over year. So slowly but surely, this company is transforming itself back into a growth company, and that means a higher valuation. George, where am I wrong?
No, you're not. I think if you look at the gross margins for services at 70%, look at the total composition of total gross margins in the low 40% range. So the point is they don't have to sell many more at the margin phones, but they can bolt on additional services and make a lot of money. And I think that's what you're getting to, Kevin.
Yep.
I think that's what everyone is looking for in terms of the transition of the business. And you're right, it's been slow, and they've been slow with things like Apple Pay and other additional ancillary services. But look at the ecosystem they have. I mean, they've got people that are locked into their ecosystem. There's really no switching other than, of course, other phone providers and Android if you want that. But it's just a very powerful brand, and you can't get away from that. You can't dispute it. And the other thing, too, is they are expecting to resume revenue growth this year in 2024 for fiscal year, which ends in September. Well, at the same time, if you look at their earnings profile, last quarter they were expected to earn about $5.97. Now the target is about $6.55. So the earnings projections are rising. If you get sales growth that is improving, I think this that speaks to a business that's well-founded, well-positioned, and of course, well-held, or very well-held by large institutions globally.
Yeah, definitely. Now, the outlier here, George, because I'm part of that ecosystem. Yeah. I get it, right?
We're waist deep in the ecosystem here.
You can't get out of it almost, it seems like. But
who wants to, Tom? We're comfortable.
I like it. George, China. That's a thorn in the side. Huawei released their Mate 60. It seems like the government's kind of cracking down on, maybe the government workers using iPhones. On that side, that's uncertainty, right? China has not pulled up like a lot of people expected their growth to return. It just hasn't. It's actually decelerating. But is India the catalyst maybe over the next couple of years, because they just opened their first stores in India. And I think people are overlooking the fact that, hey, here's 1.2, 1.3 billion people that are just finally being exposed to one of the most popular brand name products out there on the globe.
I mean, just think about the numbers. I mean, you're talking about over 1 billion potential additional consumers. Apple has basically 2 billion existing devices that are actually being used. I mean, that's far less than the total sales over the history of the company's business. But it's a remarkable growth potential for Apple. And I think you're right. You have to consider some of the risks. China is always a risk because they want to build out their own, operating system and ecosystem supporting their own state-run agencies or government or companies like a Huawei, and of course their own operating systems. But at the same time, you can't start a commerce war, and the Chinese government is well aware of this because multinational corporations sell in China, and of course they sell in the United States. So there's sort of a hands-off approach to Apple, but they are again, putting the vice grips down, in some subtle ways, like you said, precluding the use of iPhone devices for government workers.
All right, great stuff. Great backdrop here on Apple, George. Appreciate the discussion. That's George Tsilis, Senior Markets Contributor here on the network, breaking it down.